So when you're looking for a red week, okay, it's just like open. So at open, if you want a red day, typically you want to pump it open, okay. You want some sort of pump it open with some sort of fair value gap like this, okay. So you want like a fair value gap formed here, and you want this fair value gap to be violated. So that's like a signature. I'm always looking for it open to determine my bias. So if I'm bearish, I'm looking for a bullish fair value gap at open to be formed, and the chance of fair value gap forms at open is pretty high because at open we always get a lot of volatility. What this volatility creates usually is big move, which causes a PD rate to form. So like if I were to look for a bearish day, I'd want to see a bullish fair value gap at open. I know it sounds weird, and then I want to see this violated, and this is a signature and price I look for all the time, okay, just to tell me that my bias is right. I look for the opposite way first, look for that opposite way of the bullish fair value gap formed to be violated, and then look for the other way. So if we're thinking about that from like a 5-minute time frame, okay, if we go to I'm actually going to use this, take the time to use this indicator real quick. So if you guys haven't checked out this indicator, it's pretty good. So if we go to the open, which is right here, okay, 9:30, what do we see? Immediately we see the signature price I'm always looking for. What is it? It's this. It's the bullish fair value gap forms. We respect it somewhat, but it ends up being violated, okay? So this is the 1-minute time frame, so this happens very quick, okay? Now imagine if you're looking for like a weekly profile here, okay? Imagine if you're looking for a weekly profile here. This is not going to happen in a minute, it's going to happen in like a day. So pretend this, instead of this being the 1 minute, this is like the Monday. So this could all be Monday. So if we go to the higher time frame and look at the weekly, what I just showed you guys is what you expect in the weekly. So instead of like using the 5-minute chart looking for a 1-minute pump and then dump to determine the bias, okay, Monday and typically Tuesday, I would say most of the time Tuesday, like probably halfway through the day, Monday, Tuesday, you want the pump and then you want to be bearish. So immediately when I tweeted last Monday, I was like, I prefer shorts. Probably was the wrong day to tweet that because we kept getting bullish setups. But it made sense because in hindsight, if we're looking for a short, we want the Monday or Tuesday. We want Monday, Tuesday to pump, okay? And yeah, like Rick said, the true weekly profile open is Tuesday midnight, okay? Because if we are bearish for the week, we expect to pump on Monday, and then we want to look for short setups on Tuesday after like a high day's put in. So if we combine what I'm trying to tell you guys right now, if we're bearish, we look for a pump off open on like a 5-minute chart. So if we're on a 5-minute chart, you look for a pump off open in the 1 minute. Okay. Now if we go to the weekly here and we're bearish, we look for the daily candle, the first daily candle, to be green. Okay. So this was last week. Okay. Monday's candle was green. Tuesday's candle was green. We actually put it in the high Wednesday last week. Which is fine. It's usually Monday, Tuesday, or Wednesday. But we're expecting a bearish week, so we want to be pumping the beginning of the week and then get the retracement. Just like the 5-minute. If we go to the 5-minute right here, today we got the pump, we inversed the 1-minute fair value gap, and we got this massive dump. So that's what you want to see, but on the weekly time frame. Okay, so immediately last week when I said I'm looking for shorts, I probably should have waited for Tuesday or clarified. And there's people who do understand the weekly profile, and if you are looking for a bearish week, you're not supposed to look for shorts on Monday. Okay, let's say this week's bearish, or let's say this week's bullish. Today was a perfect day because we kind of dipped below in this daily fair value gap. Okay, we're very high and we hit these highs, so I'm not counting on this to work yet. But if on lower time frame we get a long, I wouldn't mind taking it. But if this is like a 1-minute time frame, this would be a fair value gap that I'm not interested in because we took out these equal highs. So it's like, okay, I'll mark it, but I'm not really going to be interested in it. So again, it's very important to understand if I'm looking for a bearish setup, or if I'm looking for a red week, we want the Monday to pump. We want the Tuesday, maybe halfway through Tuesday, to pump. And anywhere from like Tuesday to Wednesday, we want a high to be put in. Okay, so for a bearish week, that's what you're looking for. So what you can do is, let's say we go back to last week, okay, and I'm looking for a bearish week, okay. You can go to the daily, and if we want a high to be put in on Tuesday or Wednesday, and you're expecting a bearish week, well then you can go to the higher time frame or the lower time frame and look for the signature price I just showed, being bullish for every gap it open, and then for that bullish for every gap to be violated, and then it's a double PO3. Okay, this gets advanced. So it's like a double power 3. It's a power of 3 on the weekly because we're putting in a high, and it's also a power 3 on the 5-minute time frame. Okay, so this was last Wednesday. Do you see the signature price I just pointed out that I was looking for? This is the 5-minute time frame. Do you see it? Yes or no? Okay, so hopefully you guys see this. Okay, right here, I would actually argue this is the signature price, not this. We could have very well dumped below this and still pump. But the signature price to look for is some sort of fair value gap formed at open. Okay, so we can see we open up here at 930. There's no fair value gap in the 5-minute form here. We get a lot of chop, fair value gap here. But if we're bearish, okay, if we're bearish, we want a high. We want a bullish fair value gap to form. You can't see the times. I don't know why. So if we're bearish, we want a bullish fair value gap to form. Does everyone understand that? I know it sounds really weird, but if we're, see, that might just be you, Bell. Maybe full screen it. Yeah, okay, that's what I thought. So if we're bearish, we want a bullish fair value gap to form. And I'm actually going to tweet that later because that's a really good thing I look for. So again, last week, if you think about it, and if we want a red week, and we know we're weighing premium, and we know we hit those equal highs in the higher time frame, right? Where were those equal highs? Were like somewhere around here. I'm not gonna go. I'm just gonna mark them. Okay, so the equal highs are here. We know we hit buy side, so we're looking for a red week, right? We go back to like a Tuesday or Wednesday, and we look for that bullish fair value gap to form, and we look for it to get violated. This was Tuesday. We pumped Tuesday. Was there ever a fair value gap violated? Nope. So that tells me that Tuesday was not going to be the high of the week, okay? Because we got a bullish fair value gap open, but it was never violated, okay? So we now go back to, so we now wait for the next day. Next day, right here, we're still expecting a red week. We want a high to be put in at least Wednesday. If we put a high Thursday, probably not going to be the high week. So now being Wednesday, you still want a high, so you want a bullish fair value gap at open, right, which is your Judah swing, and you want that to be violated. So as soon as you see this, I can confidently say, okay, we got a bullish fair value gap at open. We're expecting a red week. It's a Wednesday. This was the Judah swing for the day and the week, so it's like a double PO3. Okay, so you're looking for kind of two PO3s for two different time frames. So the day for the daily candle and the weekly candle. Okay, and they just happen to match up because we hit buy side on the weekly. So we get that pump off open, right? And here's the candle that tells me, okay, we just hit buy side on multiple time frames. We hit buy side here, we hit buy side over here. You kind of get this little broad information as well. Very wicky here, which is good to reverse. And then you see this candle, and do you see like the displacement and just how solid this candle is? This is the high probability candle because it's not really a wicky candle. It's a big body. The bodies are way bigger than the wicks, and it confidently closes below this. So when I see that and I'm looking for a high week to be put in, I can maybe assume that this is a high week. Okay, could I assume anything was a high week down here? No. Did we ever violate this? Nope. The only thing we started to violate was at 4 o'clock on Tuesday, this. But did we really ever violate the higher time frame? Nope. We never violated the higher time frame. If I were to go on a 15-minute chart, I bet you this is just a retracement into a fair value gap. Okay. So again, right here, this is kind of the double PO3. You're looking for the PO3 for the day, and it was a very good candle. It's a high probability candle, not a lot of wicks, and the only reason I'm using this fair value gap and not this fair value gap right here is because I like only using setups with one fair value gap, but in this situation there's two. Okay, but if we look at this, you can see this is a single fair value gap and it's also lined with an order block. So at this point, if we break this, that means we're violating this, which is 1 PD array, 2 this PD array, 3 this PD array, and we've already violated this. So, and the thing is, if we're looking for a weekly red candle, we know if we're day trading or scalping, even though we're very low at this point, we should still expect way lower. Okay. So, just something to keep in mind. So does everyone understand like how you, if you're looking for weekly profile, if you're looking for a red week, or if you're looking for a red day, you want to see the pump and open with a fair value gap, and you want to see that violated? Does everyone understand that? Sometimes we'll just dump right off open, we won't get the Judas swing, but the best setups will always be if we get the bullish fair value gap off open and then inverse it, and then we should be bearish the rest of the day. Okay, that's just the number one setup. I use it all the time. Same thing if you're bearish. If I'm expecting a bullish day, okay, if I'm expecting a bullish day, I want to see a dump off open, I want to see a bearish fair value gap formed, and I want to see that bearish fair value gap get violated back to the upside. So the inverse fair value gap is the close is whatever time frame you're using. So let's say I'm using a 5-minute fair value gap here. It has to be a 5-minute close. The 1-minute close is not. I'm not gonna. See, I can't go back here. I'm not gonna base a 1-minute close. If I'm looking at a 5-minute fair value gap and the 1-minute close under it, it doesn't matter. If I'm looking at a 5-minute fair value gap, the 5-minute needs to close back under it to tell me the direction. So right here, here's your 5-minute fair value gap. And look what happens here. See how the 1-minute closes below it, but it's not respected, it's inverse. But the 5-minute held it, okay? You can't see it now, but the 5-minute actually held right here. Does that make sense? So it should always be the same fair value gap and same time frame. So if you're looking for an inverse 5-minute, it should be a 5-minute close. If you're looking for an inverse 1-minute, it should be a 1-minute close. Matt's either trolling, I'm just not answering him. Yes, I look for a fair value gap at open, and I look for that to be violated. That's what I look for, Jay Blaze. So again, if we go back to last week, we know we hit buy side, we want a red week, we look for a pump Monday or Tuesday, which if we are looking for a pump Monday or Tuesday, we want to dump it open and then a nice bullish run. Okay, and then when we get to Tuesday or Wednesday, you're looking for a pump off open and then for that bearish fair value or that bullish fair value gap to get violated, and that's when you look for your higher week. Okay, so that's kind of a lot to take in. But I would suggest go watching this back. But I think the key thing that will tell you the bias of the day is that fair value gap being created open and inversing whichever way it goes. And I've been thinking about starting a mechanical strategy, maybe making an indicator that, okay, if we get a singular fair value gap off open and we inverse it, go for a 2-1 RR. And that could be literally a mechanical strategy in itself that could probably be coded. So I gotta look into that, but it's probably pretty good win rate, I would say. Yeah, be cute. 9:30 to 11. generally you want the fair value gap to form from 9:30 to 10 because 9:30 to 10 is a prime time where you have a lot of volume. So we want to see a fair value gap formed between 9:30 and 10. And then if you know that, if you see that fair value gap getting inversed, if you see that fair value gap getting inversed, all that volume that created the bullish fair value gap in the first place is also getting reversed. So there's going to even be more to bring us back down. Yeah, it was. Jay Blaze. All right. So that was kind of an overview of what we were looking for last week and what my tweet on Monday meant, right? We know we hit buy side on Monday. We're looking for a bear setup, so we want like a pump on Monday, and then we did get one Tuesday. But generally Tuesday or Wednesday you want to see high week put in, and then for the power 3 you look for a pump during the day, and then you look for a dump after that. Okay, so watch back the video. That's not going to make sense right away to some of you new guys. And it doesn't really, what I just said is kind of more of a, it's kind of like if you're taking a math class, what I just said is kind of more like, if you know what proofs in geometry is. You write down, okay, why is this a rectangle, why is this a square, whatever, but it's not really any math. So that's kind of what this power of 3 and what I'm trying to say is. The math comes in when we start marking the fair value gaps and taking the plays based off the PO3 and based off the proofs. Okay, so it's kind of a good analogy. It's going to be published on my YouTube. So just going back to last week again, if you go back to like, I'm going to just use the 5-minute. If you go back to Monday, we get the pump off Monday. Okay, so it opened. We kind of get the pump right here at open. And you can see right here, let me see if I can. I'm just going to be doing MQ probably. I'm going to try to march this up. So, one line here. Okay, where's Monday? I think this was a fair value gap. 1 second. Oh, this is 17th. Sorry, I gotta, oh, there we go. Okay, so right here. Okay, so if you look closely right here, see how like this is a little tricky here because you kind of see this violated, you see this violated, okay, but if you look at the 15-minute time frame, there was not really any like solid bearish fair value gaps or bullish fair value gaps getting violated. So see how like this wick on the 15-minute, even though it's small, it ends up holding here. So because the 15-minute ends up closing back above this, you can just see how bullish this is, and we bounce off a 15-minute fair value gap there. So even though we kind of closed under here on the 5-minute, you got to make sure the 15-minute is kind of saying, okay, the 15-minute looks bearish too. And this 15-minute didn't really look bearish to me because I know this is hindsight, but if you think about like this right here, or this fair value gap here, okay, if someone was actually longing this, their stop would be below here. So if the market's truly bullish, we should never hit that stop. Okay. And you can see we kind of took this low here. And did we really displace under this? Not really. So we didn't really displace under this, which means this was a purchase sell side. And if someone was truly longing this, right, and you drew out discounted premium, their stop would be under here, which means if the market hits there, okay, that means your buy is probably wrong. That would probably means we're going to dump lower, but never hit the stop. So then when you see this re-broken on this candle right here, which is at 8:45, and you're waiting the trade for open, you're kind of like, okay, I understand this is a long setup that people are probably in, that the stop didn't hit, So until this gets rebroken and open, this has to be bullish, okay? And I don't think this is a Reaper fair value gap because there has to be, I haven't really looked in the Reapers, but I think there has to be an implied fair value gap here as well. Anyways, right here, okay, it's Monday. We want the pump because we want the weekly profile to be red. Okay, we want the weekly candle to be red. And you can see we close beneath these, but the 15-minute kind of re-inverse this. So it's not really bearish yet. Okay. And then from this point on, you can see this on the 5-minute was used as an inverse to the long side. Okay, this BPR. See how none of the bodies ever closed below it? So if I started seeing this, honestly, like in live time, and I kept seeing this wake back up, wake back up, wake back up, and the body's respecting all of it, that'd make me bullish until it's not. It might not make me take an entry. I would definitely not enter just because wicks are holding a fair value gap. Okay. I'm not going to enter just because I see wicks holding a fair value gap, because usually I don't like when a fair value gap keeps being retested. But if I do see wicks holding a fair value gap, especially in a 5-minute like this, I will go to the smaller time frame and be like, okay, well, the wicks are holding. Maybe I'll look for a long setup on the smaller time frame. Does that make sense? So just because 5-minute wicks are holding fair value gap does not mean you jump in long. You just want to go lower time frame and be like, okay, well, this is holding a support. It's retested a lot of times. Maybe you go on the 1-minute, look for a long setup, okay? And knowing this is Monday, it would make sense because we wanted a red day last week. So Monday, just pumping open would make the most sense. And then from here, you can see this was respected right there, okay? Where's your confirmation setup? Right here, right? So if you didn't get this entry, you'd see, okay, we're redelivering from this, meaning we have to go back to this high. Okay, right? If you ever see us redelivering from fair value gap, it means we have to go back to the next high. And then we get a second fair value gap, which is right here, which would be your confirmation entry to enter off of. And knowing it's a Monday, knowing we want a green day and Monday to get a red day and Tuesday or Wednesday makes sense here. Okay, so we get that pump there. And this is not a valid long. I know this works. And this is hindsight. You would never long this, okay? Just because we already hit the high day. If anything, you should just be in runners here. And then you can see, like, when we get this high, you're not longing. You should have already been in. There's no way I'll be longing this. So the fact that it fails means nothing because you wouldn't have longed it anyways. Okay, way too high at this point. Even if this worked, you never would have longed this. I'm saying this worked, and I still wouldn't have longed that. So at this point, you kind of go to the high time frame because it's probably like an hourly fair value gap or something. Yeah, which indeed it is. And this is just your kind of slight pullback. So if you look at the hourly, this is just a slight pullback. When you keep seeing us hold these fair value gaps to the left, even in hindsight, like, I'm not going to go back to the left and try to slap these live time because I don't know if they're going to respect them or not. But if you see these respected in hindsight, even if you see, like, okay, you come on the chart at 2150, you come on the chart when you see this candle, you should be thinking to yourself, okay, this is just respected. This is probably not bearish yet, okay? Even if you see it in hindsight. And it still has loads more to go, so you can just hop on the entry after that. And then finally, it was violated. Okay, it was violated on Tuesday. Okay, so Tuesday, we create a bearish 930 fair value gap. And remember what I said about the system, about maybe creating a bot to inverse these if we get them off open. I'm not looking for a high day right away on Tuesday. The fact that we dumped on Tuesday tells me, okay, that doesn't make sense because if we're looking for a bearish week, we want to see a pump on Tuesday and a pump on Monday, like the whole day. Okay? So if I'm looking for the high of the week to be put in, what do I look for? What's the signature and price I look for in a day if I want to be the high of the day put in, or high of week put in? What did I say like 15 minutes ago? What's wrong with this? Why doesn't this tell me that we're gonna dump? What's wrong with this signature and price versus what I said earlier if I'm bearish? Nope. What's the signature? If I'm bearish, what's the signature and price I look for? What?
Can you come look at a case quick?
Yeah, after this. Yeah, exactly. I want a bullish fair value gap. If I'm bearish, I want a bullish fair value gap. So the fact that we get a bearish fair value gap open does not make this a high confidence short, because there's a good chance this is a Judas swing, especially that's being the 930 fair value gap. So the problem with this is, if we were expecting a red week, we want to see a bullish fair value gap. We do not get the bullish fair value gap. We do not get my signature model. Okay, so this is the first issue, right? If we're bearish, you want to see a pump and then a rejection. Okay, does that make sense? Does that make sense why this ends up failing and why it wouldn't really be good setup? And you can see we kind of get a slight confirmation setup here as well. A little market structure shift here. So already we do not have the signature and price I'm looking for. Okay, because if I'm bearish, I want a bullish fair value gap, then I want that to be violated. So that's the first thing. And then you can just see we just end up pumping the rest of the day. And an entry like this is really subjective to how high you want to chase or not. I generally would not take an entry like this. I would take an entry down here if we got a confirmation set up. This is generally too high for me. So if I was trading this day, it probably would have been done at this point. And then it looks like we just dumped on the 5-minute time frame. But is this really a strong dump? No, because I guarantee you, if you were to go to the 15-minute hourly time frame, I guarantee you this is just like a fair value gap here. So that's that. Okay, so Tuesday doesn't give me my model to look for the high of week. My model being I want a bullish fair value gap to form, then I want that rejected. Right? You don't see it. So you can't capitalize on it. And honestly, if I saw this inverse, I probably just would have slapped long and open and chased this, because it is a little low resistance liquidity too. So not really any good entries here, unfortunately. I'd probably would have either chased a few contracts or just didn't enter it all, or not enter at all. And then here's the close. And then here's a Wednesday. I already kind of talked about this. So we're still expecting a red week. What do we want to see? We want to see a bullish fair value gap at open, and then we want to see that violated. So you see it here. It combines with an order block, and I draw the order block from the open, and that's when you see this kind of broken. And ICT always says if 3 PD arrays are broken, okay, trade's probably dead or going to fail. Here's 1 PD array. Here's 2 PD arrays, the fair value gap. Got a little BPR here. So this is just kind of a clump, okay, PD array clump, and all gets violated in one candle. So usually that means we're going to keep continuing that way if you see like a PD array clump violated like that. And then we retrace back up here to this inverse and just rejects perfectly, okay? And I don't know, I can't say how I would have traded this live time or not, because I always have an issue if I see us kind of holding this. I have an issue with shorting this one. So I'm not sure if I would have shorted this or not. But in hindsight, this is the confirmation setup off of this inverse rejection. Okay? I know for a fact I would not have longed this. Okay? I would not have longed this. But I don't know if I would have shorted. And I would not have longed this because we're re-delivering from an inverse and a bearish fair value gap. Okay? That's the only reason why I would have longed this. I can't say if I would have shorted or not. But more near the bottom, I think we got a lower time frame setup. Okay, I don't want to go in lower time frame right now just because it's gonna mess up where I'm at. Okay, but does that make sense, you guys? Like, does it make sense why I wouldn't long this? It has to do with two things: the power of 3 being we pumped it open and we violated the fair value gap, and the fact we're delivering from an inverse / reclaimed order block / bearish fair value gap. Okay, and because we're redelivering from there, I just went along it. So I can't say if I would have shorted this in live time or not. I may have shorted this right here. See this inverse? You can see giant candle cuts to it. Maybe I would have shorted that. But it was kind of close. Never mind. It was at 4:05, so no, I wouldn't have shorted this. Yeah, so this was at 4 o'clock, so no, I probably would never have entered this. So yeah, I would never have entered any of this if I was actually trading. I probably maybe would have entered this long. Right, you can see right here. This gets inverse. This is a beautiful A+ setup, right? Inverse. But I never would have long this. Probably would not have shorted this. And the only reason why I would have long this, even though I'm still bearish here, is because we know we need a retracement. We know we're way in discount. So that's the main reason. And then Thursday, I don't think I ever looked at Thursday. Thursday, this is, okay, I'm not going to set a limit here to short in live time, okay, because this is on the sell side of the curve, so I'm not just going to blindly short from here. But this is where I'd see this, and I'd see, okay, green candle here, red candle, and I'd see this rejection in hindsight, and then once I start to see this candle, and I know we're delivering from here, I am looking for this fair value gap to be inversed, and that's where I always take a few micros and chase that, and I probably would have made, like, this would have been a 50-point chase. That's how good this volatility was. Just because if I see us redelivering from here, I know where the target is, I know it's sell side, and in the higher time frame, you can just see it looks like a sell model here. Would I have blindly shorted this and put a limit here? Nope. Okay, because I would not know if we're going to reject this or not. But once you see their rejection, that's when you look for the bullish fair value gap to be violated in a lower time frame. And I bet you there's probably like a 1 minute fair value gap that was a bullish fair value gap around here, and I bet you that was closed under is using inverse, and that probably would have been my entry. Does that make sense? And knowing that we put in a high of week Wednesday, we're not really expecting too much bullishness. Type 1 if that makes sense. You can kind of see where this is redelivering from in hindsight, so that means you can look for another setup. Okay, good. And then you obviously see this. I would not have shorted this because you can see we already take out this low, so once you see us take out this low, I probably would not have shorted this. But it does work. This would just be like if I was holding a runner, I just want to see this reject. Alright, so last day, Friday. Again, we're not expecting bullishness. We know the high week was put in at this point. Friday, you can see there's a nice 5-minute order block off 9:30. You can see, you noticed a lot of fair value gaps in PD arrays and just order blocks forming at 9:30. They always form at 9:30 just because there's so much volume. So this time we get an order block formed at 9:30, another order block formed at 9:40. So as soon as I see this put in and traded below, that's bearish to me, right? If I see a giant green candle go up here, hit buy side, and it's sandwiched between a red candle before it, making an order block, the second I see the green candle's low taken out, which will be right here, this is objectively an order block. So that just tells you the order flow at this point, okay? And because I saw this low taken out, or what I wrote, I wasn't even looking at the chart this day. When you see this low taken out, okay, you should see, okay, now this is an activated order block, looking not bearish or not bullish at all. And we already probably wouldn't be bullish because we got the high week. We just keep looking for red candles just because the weaker profile in this situation. I will admit this is very sloppy right here. May have taken a loss in this, if I'm being honest. I don't know if I wouldn't have blindly slapped this short but maybe if there's a low time frame setup, I may have gotten stopped out on that. This was just very sloppy. But then you can see after the sloppiness is coming, you can see just very algorithmic trend line. Not too steep. A lot of algorithmic touches. That ends up breaking, hit buy side again. And at this point, I'd be like, okay, we hit buy side, just gonna wait to see if we get a setup and a short setup, right? Because we hit buy side and rejected this order block at the same time. Okay. And then you get another confirmation entry here. So I may have taken a loss, honestly, in here because I would have expected us to go right and reject it. Okay, I can't say for sure, but if I was live trading this, probably would have taken a loss here just because this price action is horrible. But then this is your entry right here. This is the textbook entry, and there's probably a 1 minute bullish for value gap here that was violated to tell you, okay, this is okay to take now. Horrible price action until it's 4 o'clock too. So you kind of dump and just consolidate until 4 o'clock. Also, the other thing I say is you saw us come really close to this low day, never hit it. Took out the low resistance liquidity first. So I always say if that ever happens, if we come really close to a low and it's not an SMT, we'll usually end up coming back later. And I don't think this was an SMT, if I remember correctly. Yeah, I remember you showed me that, Metzi. Alright, so that's a little review on last week. Today, I said gun to my head I was bullish. Even though this is still 50-50, I was kind of bullish today because I don't really have a good explanation. So you can see this is 50-50 for about 11:30. For about 2 hours, this is 50-50. And I was saying that. But I was like, yeah, I got to my head bullish. I tried 2 long, set up some paper, lost both of them. Tried a third one, won that one. Did not hold it that far, though. But when you see this is actually 50-50, you just want a paper trade just in case. The reason why I kept saying guns to my head bullish is because these equal highs were just sitting up here. So I was like, okay, these are relatively equal. Probably going to go for those. Even though it was 50-50 and it was hard to execute in, we didn't really have any engineering liquidity down here, okay? It wasn't really engineering liquidity down here. And we were holding this BPR nicely. So because of these equal highs and because of this bearish fair value gap and because we were holding this, I was expecting acceleration through this, which I thought we were going to get it here, but we didn't. But then we finally ended up getting it like 2 hours later. So basically, just because of the fact there's the equal highs up here, I was saying guns to my head were bullish, and I said that in the next commentary in my Discord. So that was that. So yeah, tomorrow, I don't know if I'm gonna paper trade or real trade yet. I gotta see what open looks like. I want to see if we get like a PD array rated open. I can use maybe to find a setup. If not, I probably just won't trade. So really, I'm looking for a PD array to be formed at open tomorrow to find a setup. But we know it's obviously ICT says don't trade tomorrow because it's the day before FOMC. I'll still try to find a trade because I'm still decent on days before FOMC if we get a setup, right? Not gonna, yeah. If we get a setup, I'll take it. Just gonna understand it's a little more risk. Yes, that was a great setup, and alright, so I think that's going to be it for now. Again, this video will be uploaded, so I'd recommend watching it. I'll probably do a full live stream tomorrow. Yeah, I guess I'll do a free live stream tomorrow. Bad day to do it, but I said I'd do one, so. Thank you. I'm not sure who Tactical Traders is, but appreciate that. Yeah, that was a good setup. So the setup you posted on, it actually had a bullish for value gap formed there, which basically was saying, okay, we have a bullish fair value gap there and price is bearish. We should accelerate through this pretty hard. So it kind of speeds up your setup. If that bullish fair value gap wasn't like that, probably would not be as good of a setup. But the fact that the bullish fair value gap was there just kind of tells you, okay, there's a lot of volume and a lot of buyers that bought here. They should get reversed and just quickly accelerate through that back down. All right, that's it for now. Again, that was kind of a review for me as well because this was my first time reviewing last week. Okay, I had no idea what really went on last week, if I'm being honest. So yeah, thank you guys for coming. This will be recorded and uploaded, so probably tomorrow. So yeah, I'll see you guys later. Peace out.